Oh, they love doing that.
Let me make
All
sure my
right.
phone.
Hello, hello. We are live. We're live. Hey, Diabie.
Hey.
Always Lisa G again, Detroit Press Play. That's who we are. And we have a special guest. She get ready to come on and educate you guys. We never asked you to get a notepad or anything, but I think you might need to tonight with all this nuggets she get ready to drop. What you think, Diabie?
I think we about to really hear some stuff that we need to talk about. Yes,
Yes. Yes.
absolutely.
So I guess we'll get started. Well, first introduce yourself. We have Miss Stephanie Harris. You guys may have seen her on Fox 2. You may have
Yay!
seen her out in
Woo!
the community because that's what she does, right? She gets out in the community. She educates people about insurance.
Yes,
It's
I do.
so much to insurance that we need to know. And it's
Yes,
time
we
for
do.
us to be educated. Tonight, you're going to get a crash course, okay? So
Yeah.
tell us who you are. Tell us a little bit about yourself.
Hello, everyone. My name is Miss Stephanie Harris. I am the insurance lady. And the owner and operator of the Insurance Experts, located in East Point, Michigan. I've been a life insurance agent for 8 years, no, 6 years. And I stepped out after 6 years and became a broker with my own agency. And I've had my own agency since 2022. I've been on my own. So basically, I am an advocate in the community about teaching the importance of life insurance because that's one of the things in the urban community, the knowledge, the lack thereof. So a lot of people don't know what it is and how it works and how they can afford it and they need it. So that is my ministry. I am a wife. I am a mother of 7 beautiful children. I have over 9 grandchildren. I just welcomed 2 of my grandchildren in, Serenity and Sincere. They're newborns, and I'm just happy to be a blessing to the community. I'm happy to be a help to the community. I feel like I'm serving my community through a life insurance ministry where I'm helping people pass down generational wealth as well as educating and hiring and offering career opportunities to people in my community.
Hiring.
Yes.
That's the thing. So feel free, anybody out here that's watching, feel free to join in. If you have a comment, you have a question, go ahead and ask. We will be looking and stopping periodically to get your questions or your concerns out. So I'm going to turn it over to you, Diavier.
So, of course, I have like several questions about the insurance industry, and
Yes.
my little background is not sufficient enough to answer questions. So, I have questions that I think that people would want to know. First, tell us how you decided to get into it.
Well, I decided to get into life insurance. I worked for Smart Transit. Special shout out to Smart Transit, Suburban Mobility Authority for Regional Transportation. I was a coach operator for 17 years. I ended up hitting a pole at Northland during a major snowstorm that we
Oh,
had, and I broke my
wow.
neck. So when I had to go off of duty disability retirement, and my life insurance went from $30,000 to $5,000 when I retired. And so, me reaching out to the life insurance company that I had, I found out they were hiring. And so I went in for orientation and I decided that I wanted to start helping other people learn about life insurance and the importance thereof. Because when you quit, leave, or retire, you're going to either lose your benefits or they're going to decrease tremendously. And the money that you were depending on is not going to be there. And so that pushed me to want to go out and learn more about it. And also, it's a very lucrative business. The financial industry is very lucrative. So it was a win-win situation for me. But the reason I got into it is because I became disabled and was forced to retire and I lost all my benefits. But I was left with $5,000 worth of life insurance. That was reduced
Wow.
to 55 will decrease to $3,000.
Okay.
Mm,
That's
okay.
that's a lot. I mean, that in and of itself was like, whoa, okay. What
Yes.
did you you decided to take a career in it? Because it sounds like you are very good at it. So, in addition to the question of how you got started, can you tell us how we can explain insurance as a way to like protect our life, family, and future, our peace of mind, or just something that is connected to death?
Life insurance, first of all, is a peace of mind. Having life insurance is a financial security blanket. It basically allows your family to grieve without stress. It also allows you to, if you become critically ill or terminally ill, to be able to have money while you are still alive from your policy. A lot of people don't know that. Your policy has living benefits. You don't necessarily have to die to use the benefits. So it'll give you a sense of security that if you were to pass away and your income, like I retired from Smart because I was forced to, now your income is gone. You still have a car note, you still have a mortgage, still need groceries, lights, gas. And right now, everybody complaining about DTE. That's not going to stop. So if anything does happen to you, your family will have the burden of your bills. So having life insurance is a security blanket for your family. Your children want to go to college. Your children should not be denied college because you passed away and you can't work your way through. You can't work to get them through college because you're deceased. Your life insurance policy, we have those where you can set aside allotment of amount of the policy through beneficiary assignment, where your child, when they become of age of 18, they can get that money and go ahead and go to college. So life insurance is basically an umbrella of different types of policies and different types of coverage that can protect your family completely.
Okay. So I have a question that I've been wanting to know about. How do you determine how much you should take out in a life insurance policy? Like, what is the normal amount for a family to take out for, if something happens? I hear 300,000, I hear 100,000. How much would you say would be the right amount to take out? And does it depend on how many people are in the family, or how does that get decided?
Well, I just want to say this. A little bit of something is better than a whole lot of nothing.
Okay.
Yes.
So getting something to have at least funeral and final expenses is a lot better than having a whole lot of nothing, which means basically I'm going to wait until I can afford what I want.
Right.
So the amount of insurance is calculated by what we call a needs analysis. We'll take into consideration how much debt you have, how many dependents that you have, what is your yearly income, and what are your monthly and yearly expenses. Because in life insurance, we don't go month to month as far as expenses. We foresee a year. Because when you're grieving, you're not just going to pick back up next month. And especially if it was a tragic loss and I'm just right back at work and I'm Johnny on the spot, you might need some time off. It might take you a year to adjust. You might have just purchased a new home when everybody was buying these homes a couple of years ago, and you have a mortgage now. You don't want to take your hard-earned time and money and investment and providing your family with a stable house and inheritance, and you didn't have enough coverage to cover your mortgage. So, because a lot of people don't know that if you pass away on a mortgage, the mortgage company will call in your mortgage within 90 days. If you live there, you'll get first dibs, but you need to still qualify financially and credit wise. And if you don't, the mortgage company will take your home from you unless you have a lump sum of money to pay it off. So when you ask the question of how much do you need, it depends on how much debt you have, how many beneficiaries did you have, how many dependents that you have, and what are your end goals for your policy. Now, a lot of people also, I don't want to keep going, it's a whole rabbit hole. We can go all night. But a lot of people get life insurance because it also has living benefits. They have policies as well there, because what they're saying now, when we get the age of 70 and 80, we're not going to have Social Security. We have policies that you can get right now that gain cash value that you can live off of. They're called Index Universal Life. They gain cash value. and you can live off of those. It'll be your own savings account. It's like your own 401k plan. As you see what they do with 401k plans, they dip and they dip, and one day you got $375,000 in your plan, and the next day you got 50. Index universal lives don't do that. So I urge a lot of people to come out of your 401k and put that money into your own bank, which is an index universal life. So back to the question at hand, it depends. How much you need varies on what your debt to income ratio is.
Okay. And is that how I determine the affordability of the policy?
You determine the affordability of your policy by gathering all your monthly bills together and seeing how much money you have left extra. And what it is a lot of people prioritize unnecessary things. Club money, gym shoe money. I see people stand in line for Jordans all day, and then 3 months later I see a GoFundMe because they didn't have life insurance. Their priorities are not in the right order, but that comes with the lack of education. There's no condemnation. It comes with the lack of education. So what you can afford, like first thing first, make sure you got health insurance. That's your first bill. Rent, lights, gas, water. Your life insurance comes before your car note. Your life insurance comes before your car insurance. Your life insurance should be one of the top bills priority before all the other stuff, before eating out, before taking trips, before hair and nail appointments. Like, you're going to look real good in that barrel casket with them fancy nails.
So that's another question that raises, because when you talk, it's like, oh, I can ask this, I can ask that. Now that I got the expert.
You can ask whatever. I'm ready.
When we are trying to get insurance, like, how do we know? Like, okay, so we know how we figure out how much we want to get, but how do we know what should be spent on funeral costs? Because do you tell the funeral home in advance, like, how much you have to work with, and let them just decide to spend all your money? Or you know, what type of advice do you have with using the insurance to cover burial costs?
The funeral home doesn't know you have life insurance unless you tell them. Always make your arrangements first, and that comes into play as well as your will and your final testament. I offer those as well. You determine before you pass away how you want your money to be spent. You can designate what you want in writing and get it notarized on how you want your money to be spent. Because you do have people that you say okay, let's give an example. You have $50,000 worth of coverage, and you say, I want a whole course, drawn carriage, doves. That's your money. That's what you want to do with it. Your wishes should be honored. But then you get somebody to get the check and put you in a barrel casket, cremate you, and throw you out to the side, and you didn't get your final wishes. That's why that needs to be in writing. Or you can have someone who wants to do all of that for you, but don't have enough. So they have to do the basic minimum for you. So basically, when it comes down to how you want it to be spent, you can dictate that. You can write all that down. You can have it set out. The funeral home does not know you have life insurance. Always make your arrangements first and get a price. Then you can come back and say, okay, I have insurance, because it's two books. It's two books. One is cash money and one is life insurance. Cash money, they're going to give you the better deal. Life insurance, you getting the Cadillac policy, baby. You getting everything. They're going to roll you out the red carpet because they want all that money, because that's a guaranteed check. But one thing about having life insurance, you just turn over after you make your arrangements, then you let them know you have life insurance because you've already got a final price. Most funeral homes will give you a fee for using life insurance because they have to wait on the money. It's not cash up front. So you will get a small fee, which is fine. And they'll get their money and you'll get your money. Most life insurance companies will mail 2 separate checks, one to the beneficiary with what's left over and the other directly to the funeral home, or they'll mail them both excuse me, or they'll mail them both to the beneficiary, but one is designated as the payee is the funeral home. So you can't cash that check. So therefore, the funeral home will get their money. You'll get yours, but always make your arrangements first, because I guarantee you go in there, I got $200,000. What? Tell me what to do. They're going to give you a good $50,000 funeral when you could only pay
Right.
$15,000.
Okay. They're gonna be gouging.
Oh, they're going to guide you. They're going to guide you.
Did you have any questions, Lisa, that you wanted to ask?
Yes. I'm just listening to. I'm in awe because that's so true. That's the first thing they ask you, really, when you go to sit down and plan a funeral. You know, do you have a policy? How much is your policy? That's the first thing they ask you.
The right
So
answer is do not choose.
yes. I want to know, and for the audience to know, at what age, because when we're young, we don't think about it. But at what age should you start planning to get an insurance policy on your own?
I say in your 20s, as young as
Mm.
possible. Lock in your lowest rate, or as soon as you get dependents, as soon as you have a child, as soon as your child is born. Parents, one thing that, okay, I want to just like go here real quick, and then I'm going to come back to it. Imagine if everyone in our community, when their child was 2 weeks old, put $100,000 on each child. Seeing the alarm and death rate in our community, could you imagine how much of an uproar those life insurance companies would be pressing Congress and legislature over? Someone's calling my phone. Please forgive me. Over gun reform in the urban community. If every person in the urban community who passed away, children, young adults from violence, $100,000. I mean, everybody gets $100,000. And if you get $100,000, just say, for instance, on a 2-week-old child, you're looking at like $20 a month. And that policy will go with them forever. It's a whole life policy. So basically, I would say the younger you are is when you get life insurance. As soon as you have children, get life insurance. If you have you purchase a home, get life insurance. You purchase a car with a car note, get life insurance. Every 12 to 24 months, reassess your life insurance and your needs, and also think in consideration of inflation. When I was growing up, I can get a candy bar for 25 cents. I can get a whole Snickers for 25, 35 cents. That same Snickers in 2026 is $2.50. Inflation has taken place. So we can't just think about today's costs. We need to think about future costs. So the younger you are, the more coverage you can get for the lower rate. The longer you wait, the more expensive it's going to get. And you might get sick. What if you catch a disease? What if you develop cancer? What if you get high blood pressure, diabetes? Now your rate is skyrocketing when you could have caught it and kept it level at a lower rate. So the sooner the better. I say when you're getting your own policy as a young adult, I say your 20s as soon as possible.
So you said to reassess. Now,
Yes.
Let's just say you've had this policy for maybe 10, 15 years, right? But reassess may also bring a higher rate. Am I correct?
No.
Oh, okay.
Reassess means look at your coverage, see what you have, and see if it still meets your needs. If it doesn't still meet your needs, you will need to increase it, which means
That's
you will
what
get a separate policy. And yes, the
Oh,
older you are, the more expensive it get. One thing I'm gonna tell you: never let go of a policy that you've had over 2 years. If you have a policy, listen to me clearly out here in America. If you have a policy pre-COVID, do not let that policy go. That policy is solidified. It's past 2 years. And after COVID, all the rates skyrocketed. They increased. So don't let some salesperson come to your house and talk you out of a policy your grandma got for you and tell you cash it in. Do not cash that policy in. that policy, especially if it's a paid up policy.
Mhm.
So, with that being said, yes, every 12 to 24 months, reassess your needs, which we can do the needs analysis and see what other debt you might have incurred, any more children, or what your other needs are. And if your finances have increased, now if your finances have increased, you can afford a little bit more life insurance. Yes, it will be higher because the older you are, the more expensive it gets, but never let go of what you already have. And also, parents, just quick tip. Look into paid up policies for your children. Don't pay forever. Yes, it's a lower rate, but make that sacrifice today. Because if you do a 10 pay, once that 10 pay is over with, that child has that policy and that coverage for life, and you never have to pay again after 10 years. Or do a 20 pay. You can do an IUL, which is an Index Universal Life for a child. I like that one because it's just like whole life because it doesn't expire, but it gains cash value as well. But it has like the term flexibility rates with the lower rates. So definitely get it as early as you can. Reassess it every 12 to 24 months. Don't cancel anything you've had over the past 2 years because that 2-year contestability clause is over at that point. Most life insurance companies have a 2 to 4 year contestability clause. And if you've passed those 2 to 4 years, do not cancel that policy. Just add on to it and build your portfolio.
Okay. Great. Back to you, DIVA, if you have another question.
I love
I
your
have
name, DIVA. I just want you to
Thank
know
you
that.
so much. Thank you. I appreciate that. I just want to know. So we touched on I think you said IUL. Is that what's the name of the insurance?
It's called an
Okay,
Index
so
Universal Life.
okay. And so when we're trying to figure out insurance, how do we know which to choose between the term life, whole life, or IUL? Like which one? Because I heard you say that IUL is better than whole. So is that one better than term as well, or does term trump all of them?
So let's just break it. Let's go down the line. You have children that are young and you want to go off affordability. You can do an Index Universal Life for a child, pay up to 20 years. Or you can do a whole life. Depends on what's in your affordability. Both of them are very good policies. Both of them are. When you're older, senior citizen, whole life. I will not do any term because your rates will be high. Whole life will be high too, but term life tends to have increasing premiums. I won't name companies, but it's America. I'm not saying if it's Prime or Trans. I'm just saying it's an American company out here, and their rates constantly increase every 5 years. And then once you get to the age of like 70 or 80, they start going up tremendously, and to the point where you won't be able to afford that policy that you have. So a lot of times just read the fine print, and you always see, I don't want anyone to forget this. Every policy that you get has a 30-day look period, which means you have 30 days to change your mind. So once you get the policy, look it over. Call me. You don't have to get a policy with me. I'll look it over for you. If you had a policy for a while, look it over for you. Therefore, you know what's best for you. But don't get a decreasing term. They use also mortgage protection where you pay the same rate, but the coverage decreases. You don't want that. If you get term, you want a level term for 10, 15, 20, 30, 35 years, 40 years, depending on your age, which one you can get. But you want a level benefit. After the term is over, yes, it will increase. But make sure you don't get an increasing term where every 5 years your rate increases, because eventually you will get to the point where you won't be able to afford that policy. So do your research on which is better for you. If it's whole life, that rate never increases. Whatever you pay today is what you're going to pay for the rest of your life. If it's whole life, you can do a 10 pay or a 20 pay. Whatever you pay after 10 or 20 years, that's it. You own it, and the rate never goes up. Check your terms. Term policies, they have some that the rate will never increase up until the term is expiring, and then you have the option to continue the policy at a higher rate, or You can convert it. They have conversions where you can convert that term policy over into a whole life policy and pay the current age, not the age you got the policy 30 years ago. So if you got it at 20 and it's over at 50, you're going to pay a 50-year-old rate. So you can convert that term though, but you have guaranteed insurability on a lot of these policies, which means they can't ask you health questions, which means maybe you develop cancer over 30 years and no other company will take you as a new client. If you have a GIO, which is called guaranteed insurability, they can't deny you because you locked in that clause. There's so much to different policies where when you do a consultation, you really want to ask certain questions. So the type of policy that but to your question, the type of policy that is best for you is the one that best fits your lifestyle, your budget, and your needs. And that all goes into play with a needs analysis. My personal choice, term is if you're young and you have bills, mortgage, kids, things like that. Get you some term. Index universal life, if you're trying to save money, when you get in the future, you don't want to pay forever, but you want to build a high amount of cash value, that's an index universal life. Whole life is if you want to pay up to a certain point, you want your rates to never increase, you want your value to never decrease because it does not play in the stock market. You want to get whole life, especially if you are an older individual. So say, for instance, you're like 50 years old, 60 years old, and you're like, okay, I finally want to get some life insurance. Get you some whole life. Not unless you're willing to pay into an IUL at about $500 to $1,000 a month.
I wanted to say now the term life that ends at age 86 or something like that. Doesn't that come to an end after you get a certain age?
Some of them go all the way to 90. Some of them go to 100, depending on what policy you have, but you're going to pay that rate.
Yeah. Oh, yeah. Yeah. I have, I'm hoping that you answered the question because you kind of spoke to all of them. Young Tina says, what's the best policy to get?
How old is Tina?
I'll say early 50s. Mid, early.
Tina can get a term. It's only going to take her for 20 years, 25 years, or Tina can get an IUL. She won't have a lot saved up into it to get cash back out of it unless she contributes a high amount, or she can get whole life and lock in her rate. It depends on what her needs are. It's not easy to just tell a person which one is best for you unless you know what their end goal is. What is Tina's end goal? Is Tina trying to leave an inheritance, or is Tina just trying to get buried, or is Tina trying to live off of her income? Because she was like me, I'm a business owner. I don't get a 401k. I don't have a pension coming. I might not get that much Social Security because I'm my own boss. So I have to have an IUL. I have to save for my future. Mm-hmm. Yeah, you understand what I'm saying? So if you're your own boss, I mean, not saying that like I'm a boss, but I am a boss. No, I'm just kidding.
What they do?
You have to save for your future. You need to think about your own retirement. So it depends on what her situation is. She can give me a call. Tell her, give me a call, and I can give her a free quote, free consultation. It doesn't cost her anything, and we can see what she needs. Because if she just wants to get buried, we'll go with whole life. If she wants to leave an inheritance, we can go with term or index universal life. If she wants to have a retirement fund on top of what she already has, because as you know, we're not getting Social Security like our parents did. That's about to be wiped out. Yeah. So you might want to save for your future. So it's all about a personal need.
So we're definitely gonna, what's your number? I'm gonna put it in the chat now.
313-231-2813. I'm Stephanie Harris, the insurance lady. Call me. Don't go fund me. You fund you.
Okay. I like that. The
313.
That's where I come in and be like, top dog. No, I'm just playing.
Top dog law. Top dog insurance.
Top dog insurance. You want insurance? You get it. Yeah. You want
that dog got out of the yard. That dog got out of the yard and bit you.
Right. And Also, we have accidental insurance. I didn't speak on accidental. Accidental is a double indemnity rider that you can also get on your insurance. So, say for instance, you got a $200,000 policy, and you pass away in an accident. Your family's getting $400,000, and that is the least expensive policy out here. Is accidental insurance. But don't be fooled. I had a young lady who got very upset. She said her grandma paid $5 every month ever since she was a kid. And when she died, they didn't pay the policy. Her grandmother had accidental and did not know it was strictly accidental. Grandma passed of natural causes and it did not pay. And this young lady had a sour taste in her mouth about life insurance and didn't want to hear anything about it because she was not educated, and neither was her grandmother on the type of policy that she had. Don't just listen to one person come and sit you down. Looking at it in writing. If you don't know how to read it, call me. I'll read it with you and I'll highlight everything for you. We're located in East Point, Michigan, and you can do a no-cost policy review. It don't cost you a thing. Therefore, you know what you have, because that's another thing. A lot of people have policies. They just don't know what they have.
So I'm glad you said that. What type of questions, when people come and sit with someone and they're thinking of getting insurance, what type of questions should they come with?
How does this policy pay out? What all does it cover? The cost, of course. And how long will this policy be in place for? And basically, do they take my health conditions if they got pre-existing conditions? You want affordability. You want the coverage you need, and you want the duration that you are looking to acquire. So basically, my mortgage is a 20-year mortgage. You just need a 20-year term policy. Or my child is one. I just need a 30-year policy. That way they got something until they grow up and get older. Or I'm 50 years old, all my kids is gone. Get you some whole life. It varies. Like I said, it varies. The questions you need to have is basically your affordability, what your needs are, how this policy pays off, and what does it all cover. Because a lot of policies don't cover everything. Some policies don't cover suicide. A lot of people don't know that. Some policies do cover suicide. People didn't know that either. Some policies don't cover accidents. Some of them do. Like say for instance, you're out of the country. You're in Guatemala and you zip lining straight into heaven. Might not cover your policy. And you need to know what it covers. Do your research. If you out here dune buggying and your dune buggy flip over, will that policy pay off? If you're skydiving, a lot of people are into this new thing where they jumping out of planes. My son just jumped out of a plane. You had a dive jumping out that plane. Will your policy cover you jumping out of a plane? So ask the questions of the type of hobbies that you do. Like some police officers have to have their own insurance because a lot of companies won't cover police officers. They won't cover firefighters because they have dangerous jobs. The risk. Yeah. So you want to ask those questions. Basically, what does it cover? What type of death does it cover?
Wow. So let's just say you passed away, a person passed away, and maybe they had, because some people have two, I believe, the accidental and the other policy, your general policy, right?
Yeah.
And let's just say it was not an accident that you passed away. Does that money also go back to, go to the family?
If you didn't have an accident, you will not get that money. If you had a policy that covers any type of death, you will get that money. If it does not cover suicide, you will not get that money if you pass a suicide. So those are the clauses, once again, that from the previous question. Basically, it depends. So you got accidental and you got whole life. Say, for instance, you had a heart attack. You're not getting that accidental. You're only going to get the whole life. It'll pay out for that. But if you take a risk, So just like you go to the casino, a lot of people, they love that casino. I see them on the little dune buggies down there on oxygen and everything, still smoking cigarettes. Um, they take a risk, and you take a risk with accidental, but it's a good risk to have just in case.
Yeah. So you don't even get the money that you paid into it?
No, ma'am, not accidental, and not a lot of terms. Now, that's another thing. Term policies, you don't get that money back either unless you have return of premium. They do have policies that are term, that if you don't pass away in a term, they'll give you all your premiums back. They cost more than regular terms, though. Regular term policies, if you don't pass away in no term, you lose every dime you put into it. That's why I steer toward universal life, index universal life, because it has the similar rates to a term policy, but it gains cash value. So that's why I tell a lot of people, maybe you don't want to look into term. Maybe you want to look into an IUL, because you got it when you were 20, now you're 50, it's about to expire. You are paying $100 a month or $50 a month. Over 30 years, every dime, every penny you put into it, you just lost. Not unless you get return of premium. Now, return of premium, like I said, it costs more than regular term, but it's a win-win situation, because if you don't pass away, they'll give you a lump sum tax-free check. Tax-free check. Tax-free check. That's what I like about life insurance. Tax-free check. Give me a tax-free check. Ain't got nothing on this check.
Yes. Oh my God. And there's so many different variables with this insurance. I mean, it gives you something to think about, definitely. Now, what about if someone has insurance at work? You know how they give us the policy, but you have to be aware that when you leave, that policy won't go with you. So, do you see that a lot of people just rely on that insurance?
Yes. They love to tell me I got it through my job. And they say it come out my check every week. And I said, that's your health insurance. Oh no, it's all bundled together. That's your health insurance. Comes out every week. No, my life insurance come out my check every week. The lady came out to my job and she set me up. I said, okay, so it's a separate from, I said, so you have two deductions. You have one for life insurance and one for health insurance. No, it's just one. If you have two deductions, one for health, one for life, yes, you have life insurance that will go with you when you leave your job, because all they do is have it coming out of your check. And that's something similar to direct deposit. Basically, they just take it out of your payroll deductions. They do have that for those as well.
It's the key something.
Policy. You want to go down that one? We can go down that one next. That's called Key Person. That's a different one. So if you have it where matter of fact, when those people come, if you work at a place where they come in during open enrollment and they sit down and they have them all in like the cafeteria, things like that, ask those questions. Do this go with me when I leave? Because some companies do payroll deduction where your life insurance will go with you, but that's your life insurance. That's not the company's life insurance. It's going to come out of your check because they have offered payroll deduction, but that is your life insurance that will go with you. But if it's the company's life insurance, that when you apply for the job and you see the benefit package and it says it comes with 401k, it comes with dental, vision, it comes with life insurance benefits, that is the one that when you leave, you don't take that with you. So it varies upon, like I said, different people, different scenarios. Whereas some people do get extra life insurance in open enrollment. People come out to your job and they just do payroll deductions. Some people think that their health insurance coming out is their life insurance, but in reality, it's just your job's insurance. So it's just doing your research and do your research. Be nosy about your business. Like a lot of y'all be in other people's business, but you need to be in your business.
Absolutely.
Your financial business. Get nosy about your business, because that's a life or death situation. That's your money.
Yes.
Diabia, you have questions?
I don't, I have learned so much in this short period of time that I'm just like, one thing that I do want to ask though, do they
Yes.
have like some type of group plan for like a family with insurance? Like what would you say like a family of 3 or 5, or if somebody has like a family, what type of family plan would be best with life insurance? Or
Are
should
the
it all be
children
considered separate since everybody's not going to die at the same, well, the likelihood is that not everybody's going to die at the same time, but would there be some type of group plan?
That's a great question. That's an excellent question. They do have policies where you can do a family plan. That's what they call it. But basically, the husband can get a policy, and his wife and the children can ride under them as riders up until a certain age, depending on what company. Some companies let the wife ride as long as they're married and as long as the primary pays the policy, and the children can ride as well. They do have family plans like that. They also have family plans where a parent can get a policy and the children can ride up under them. They also have policies for grandparents where you can get a policy and your grandchildren can ride up under you.
Oh,
Let's
okay.
give an
That is
example real
that's
quick.
good to know. That's definitely good to know.
Yes, you get a policy. I have a company right now. You get a policy, and your grandchildren can ride under your policy for $15,000 worth of coverage for $10, and that's up to 9 children. Not 10
Wow.
times 9 children, $10
Right.
for 9 children, and you
Okay.
pay one $10 rate, and all 9 of your grandchildren are covered for $15,000 as long as you keep it.
Hey, that's like a plan to me. Okay.
I mean, and that's cost efficient because everybody doesn't have it right now, especially in this economy. So a little bit of
Right.
something, like I said, is better than a whole lot of nothing. And instead of birthday gifts and Christmas gifts and toys and things, they break in clothes and shoes and perfume. Give your
Okay.
children some financial security for their future. Invest into
Absolutely.
your children's future. I mean, they'll appreciate it later when either you pass away and leave them as a beneficiary, or either they get older and they can borrow and take from that policy. Your wisdom today will impact your children's and your grandchildren's future. The Bible says a good man leaves an inheritance to his children's children.
Okay. Okay, baby. What? Okay.
Think about not just you. And when you think about other cultures, they pass down generational wealth through life
They
insurance
do. They
every
do.
Life
day.
insurance at gas stations. I mean,
Yeah.
I'm just
Every
saying.
day. Every
They
day.
do
They
it.
pass away and well, not pop, grandpa or grandfather or whatever
Right.
leave $1 million policy because he got it when he was younger. And so now it goes into a trust. That's a whole nother subject.
Right.
yeah.
Get you a trust.
Irrevocable trust.
Get you a trust. Put
Okay.
everything in the trust. Put the cars in the trust. Put the house in the trust. But that's a whole nother subject because that's a rabbit hole.
Another subject. And we're gonna have to call you back. We're gonna have to have you back because that was something we were gonna go into. She
Okay.
has experience. Yavia has experience with it.
Yes.
So do I.
Absolutely. Trusting UTMAs and
Yeah.
the stuff that the stars do. That's what we talking about. Okay.
Right.
Yeah.
Protect your
Yeah.
assets. That's
Yes.
Yes.
Uncle Sam can't touch your trust.
Okay.
Yes.
Okay.
Listen, you better put everything in that trust, okay?
No, that's right.
Even
Put
the
it in
money,
there.
even the money say, "In God we trust."
Right.
Okay.
It's
Okay.
God. Yes.
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 It's on the money.
Okay.
Put your little several dollars, your house, and all of those things, man.
Absolutely.
Don't lose your assets and and lose your generational wealth. Your children and your children's children and their children are dependent on you to make the right decisions today.
That's
Because
right.
it's going to impact them tomorrow. Stop letting your children and your children's children start from the beginning line when everybody else has a head start. Give your family the same advantage and opportunity that these other people are giving their children. You can 100% afford this. If you have a $200 pair of shoes, you can afford this.
That's
If you
right.
got $75 nails, you can afford this.
Okay.
That's right. That's
Come
right.
on, man. Don't get a BBL before you get some life insurance.
Hello.
Okay. Because the kids ain't gonna
Hello.
have nothing to fall back on.
And
That's
you,
what I have.
I'm about to
Listen.
say something. I got to be professional. I'm about to
That's
say
right. You gotta
they
get
can
to the
fall back.
point.
They can
We gotta
fall back.
talk yeah.
Oh Lord.
Yeah, but that, I mean, in all honesty, that is so true. You know, the things that we consider a priority, but leave us just without, you know, because one day we all have to leave, but what you're gonna leave behind is important.
That's right.
Exactly.
Absolutely.
I tell people all the time, I'm worth $500,000. And that's another thing. Ding, ding, ding. Life insurance is considered to be to go toward your net worth.
Mhm.
Mm.
Yeah.
Your
What?
net worth.
You know why I believe that? Because you look at some celebrities, they ain't been out in a while. It'll say they worth so many dollars, but they're counting that insurance. I did find that out.
Your net worth. So when you go applying for different loans and different businesses, a lot of times the banks will make you take out a life insurance policy to cover that loan in case you pass away uh, during the
Mm.
payment of the duration of that loan, which increases your net worth. So if you go get it, you already got $1 million policy, a $250,000 policy, you go in the bank and you say, hey, I need to get a $50,000 loan. They might want to be put on your policy as a beneficiary for that $50,000 in case you pass away.
Wow.
Your
Man,
net worth. And look, as long as these people have, this is important because I know we're running out of time. You
we
can put
all
a
we all good.
you can put a policy on anybody that you have insurable interest in.
Yeah. That's how
Insurable,
that job
insurable,
does.
yes, insurable interest means that if something was to happen to this person, it will affect you financially or mentally. You can put a
Okay.
policy on this person because basically, if you have that you're not married but y'all live together, that's your spouse, but you're not married, your significant other, what you want to call it, they pass away, you're not going to work the next day. You might not get bereavement because you're not legally married,
Yeah.
but you'll be able to get that finances to help take care because you guys are splitting the bills. You guys are co-inhabiting together. You're going to need that income from, you're not married, but you still are together. You have insurable interest. Your children's father, your children's mother, your parents, your grandchildren. Some siblings you're responsible. If you have insurable interest, you got a business owner. This is what you were talking about, Lisa, key person. You have a business partner. You guys go in the business, we together, we're gonna run this business together, we open a restaurant. You can put a policy on your business partner, your business partner can put a policy on you. It's called key person insurance. Key
Mhm.
person insurance is if this person passes away or they cannot perform the duties that they were supposed to do within that business, that is money allotted for you not to bury them. That's the family's issue. That money is allotted for you to replace them to keep the business going because
Wow.
that person was a key person in that business. And by you guys being partners, you have insurable interest. You can actually put a policy on your business partner because if something happens to them, it will affect your business. Yeah. So do your research. Call me. I'm Stephanie Harris, the insurance lady. 313-231-2813. Don't go find me. You find you.
I love it. I love it. I hope everybody is getting as much education out of this as we are. And this is my second time hearing her, but not like this. So each time I speak with you, I learn. I'm
Thank you.
telling you,
Thank you.
I love it.
Absolutely.
And we
She's
are
very,
hiring. So
she's
if you know
hiring.
anybody who is 18 or over and they're not doing anything, they don't know what they want to do, we are located in East Point, Michigan. Training is in person and virtual. Right now, we're running a special on the classes. If you get with me, we're doing them for $50 for the classes right now. So that's not even a dinner out. Like $50 can change your life with the classroom. So if you have a kid that don't know, they don't want to go to college, they don't want to go to trade, Google how much life insurance agents make. Just Google it and then call me. I can't hear you.
Lisa, your audio is gone. Oh,
Okay, can y'all hear me now?
yeah.
Yes, man. I'm just over here taking in the nuggets. Make sure you guys call her if you need insurance, want to be trained, you want to offer insurance. Again, that's 313-231-2813. Stephanie Harris, the insurance lady. Don't call nobody else. Call her. Don't call nobody else. Y'all see how much knowledge she has.
Yeah.
I mean, that's remarkable, but we need to be educated because coming up, we weren't taught this. I know I was.
We were not. Nope.
Yeah.
We were not.
And it took me to take a loss to learn.
Yeah.
I had to take a loss to learn.
We took a hard lesson when my grandmother passed away some years ago. She changed her policy. You know, we don't know what's going on. Sometimes they'll change it. And she ended up passing away. I'm thinking I could relax, you know, hey, we get to bury her. She has insurance. Well, the company came over to my house and said, unfortunately, she has no policy to bury her. And I'm like, no, she had a policy. She died, they said, 7 days before it would have honored. So I'd learned a lesson then. And the only thing they would give us was the money that she paid into it. Just
and that
changed it.
That takes us back to what I said previously. If you have a policy over 2 years old and you got it pre-COVID, do not let somebody come in your house and talk you out of changing or replacing that policy, because that is exactly what happened to your grandmother. I'm quite sure it did. Somebody came in there and told her how much of a great opportunity, how this would be best for her, and she didn't know. And she switched her policy over, probably canceled the one that was going to pay for any and every reason and got another one. And she was within her 2-year contestability clause and it did not pay off. They gave you what they call return of premium.
Absolutely. That's exactly what they gave.
Cool. That's not cool. And that's why you need to call somebody like me, a professional. You do not have to get a policy with me. I want to constantly repeat that. I would like it if you did, though. But if you don't, I am okay with that. Let me show you what you have and how it works so you do not end up in that same situation. You really need to know how it works and what you have. That's very, very important, because some of you guys, and another thing, who's your beneficiary? I had too many people call me. My husband died and I'm trying to put a claim on his policy. And his ex-wife is still the beneficiary and there's nothing you can do about it. You can go to probate whenever you want. That ex-wife is getting that policy.
I got a question for that. So let's just say that, you know, they had this policy, they got married maybe a second time. And, you know, yes, they have a new spouse, but the old one was on the policy. If they didn't change it, the old one is the one that will get it. Am I correct?
Yes, ma'am.
Mm.
And it stands in the court of law. It's on black and white.
Be careful if you move on.
I've had a sister, and this is another thing, parents, when you get a policy, and you want to leave it for your children, designate each child as a joint beneficiary in writing. Stop saying that I'm gonna leave it to my oldest daughter or my oldest son and he gonna do right. Oh no, just had a whole situation go to probate court and she got to keep all the money. They wasted their time. They spent money on lawyers trying to contest it. My daddy said that she was supposed to split it with us, which he did because I wrote the policy. But on black and white, The only beneficiary was that oldest child that was supposed to do right, who didn't do right. Husband got in her ear and everything went out the window. Money changes people's attitude when it's in their hand. When it's not in their hand, yes, they're gonna promise you they're gonna do right, they're gonna do this, this, and the other. So parents, spouses, like if you're a spouse, it's another thing, and you have children that are not your spouse's children, leave your kids their own policy where they're the beneficiary of it. Get your spouse something separate where they're the beneficiary of it. Because your spouse is not guaranteed after you're gone to give your children anything. And I know she was such a good woman and she gonna do right. Or he's such a good man and he gonna do the right thing. That all changes when that money is in hand. Black and white people, put it in writing. Somebody hit the bell for me. Let's hit a round of applause. Put it in writing.
All right now. Okay. You put it in writing. Y'all heard it.
Yeah, I heard
I'm
it
openly
here.
honest. I try to do it with humor, but I'm dead serious. You have to protect your family, your assets, and their future. And it's a lot into it than just, I got a policy, I'm set. It's more involved in that. So you want to talk about it, call me. I can teach you. You want a new career, call me. I'll train you. Lisa know that.
It has been an absolute pleasure hearing all of this information. This has been a very informative, broadcast tonight. The podcast was very informative. You guys, if you have any questions, Ms. Harris, Stephanie Harris, her number is up on the screen. She can be reached at 313-231-2813. That is the insurance lady, top dog insurance lady. Okay. And this has just been a very beneficial night. I learned a lot. I really did. I learned a lot. Now, and I do have a whole bunch more questions, but I do know that we will see you again on the podcast. So thank you so very much for being our guest.
And thank you for having me. I truly appreciate that. And if you ever speaking engagements, or if you know anyone else that would like me to come speak, I do not charge to speak. I do it as a ministry because each one teach one. If God give me talents, I do not want him to come back and I did not multiply them. I want to multiply every talent that he gives me, and I look forward to being a blessing to helping and teaching and educating anybody with an open ear.
I know that's right.
That's how you get blessed, when you bless others. It's coming back.
Thank you.
Absolutely.
I so appreciate you. So I hate leaving. And now we ain't doing nothing but leaving the computer, right?
I know, right?
It's like I got to put my coat on.
I know.
It was a good time. It was informative, just like Diabia said. I mean, tonight it was needed. A lot of people probably were just like us. Probably I was writing stuff down all on napkins, and I just got a little mess around me. But I thank you,
one more thing?
Bottom of my heart. I thank you so much.
Can I say one more thing?
Yeah, you can say two more.
Please let your beneficiary know that you have a policy and that they're your beneficiary. Because hiding it in between the mattress and somewhere because you scared somebody gonna kill you is the reason why over $2 billion worth of life insurance go unclaimed every year, because you didn't tell them you had a policy. They're looking and they don't know they don't know what company it is, and they have no way of figuring it out because you're scared somebody's going to kill you for a policy that you left for them to bury you.
Wow.
Don't be afraid to tell your beneficiary, and make a copy of your policy and give it to your beneficiary. So God forbid you have a house fire, your beneficiary has that policy. That's it.
That's right. That's right. Thank you. See,
You're
those
welcome.
small nuggets. No, small but big nuggets.
Okay.
That was big. Because nowadays you don't want to tip, especially if it's a him or her
Yeah.
that you laying with, or potentially, we don't know what they be thinking.
And also get a contingent beneficiary if you know that your spouse is abusive.
Right. It's gonna keep hitting you in your eye over and over.
Get
So
a
you
contingent beneficiary.
so
So
you
while
can't
you in
keep them
prison,
out. Okay, they don't want
What
you
you
to see the
say?
policy.
I'm saying, so get a contingent beneficiary. So if he in prison or she in prison for unaliving you, your contingent beneficiary can still make the claim for the policy.
Okay.
Always have a contingent beneficiary.
Yes, yes. I so appreciate you. Well,
Okay.
ladies, time for us to end our evening. We thank the viewers. Thank you guys for tuning in. Hopefully, we'll be inviting her back probably really soon. But I
Thank
know that
you.
we'll be somehow communicating. And on the count of three, we're gonna say Detroit Press Play, and we are out. You starts the count off.
Oh, 1, 2,
2,
3.
3. Detroit
Detroit
Press
Press
Play.
Play.
Wait a minute, her sign is upside down. Put the sign the right way, Steph. Top dog. Top
Okay.
dog insurance.
Okay.
Okay.
Okay. We gotta do the little hand.
Yes. Thank you. Thank you guys.
You're welcome. Thank you for having me. I appreciate it.
For
All
sure.
right. Have a good one, y'all.
Yeah.
We out.